Good day to you all. This is Terence Baker, news editor, Europe, Middle East and Africa for CoStar Hotel News. Welcome to the podcast, The Upgrade, coming to you once a month, hopefully, from the offices of CoStar here in London. I'm actually at the Fairmont Windsor Park today for CoStar's annual European sales meeting, so it's a change of location for myself. Very nice. Glad that you're with us wherever you are. Today, our special guest is Carine Bonnejean. She is Managing Director, Hotels and International at Specialist Business Property Advisor, Christie Co. Really happy to have you here, Carine. How are you today?
Thank you, Terence. Very happy to be with you. All good in London. A bit dark, but the sun has made an appearance, so life is good.
We have had some very nice weather these last few days, considering what we've had since the beginning of the year. So, Carine, just give us a bit of background about yourself, your career at Christie. You've just been promoted recently, but what kind of career have you had there?
An interesting one, I would say 21 years in May. So it's quite a long period of time for someone in the industry, in any company. I started in the consultancy division. I was a senior consultant. Over the years, I ended up working on a lot of UK hotel project, due diligence, feasibility study. With time, I obviously developed, grew in the company and took over that team in the UK. We had at the time already a number of European businesses in France, in Spain, Germany, Nordics. And we thought that at that point, it was quite important to pull together the consultancy team to have one offering for all our clients across Europe. So I looked after that team, really putting it all together so that we had a consistent offering. So still very, very focused consultancy. And with time, I looked after our French business as well on 2 occasions and recruited and managed the team. And 3 years back, just before COVID, I was promoted to be in charge of the hotels division. Again, put it all together across brokerage, consultancy, and valuation. And only a few weeks ago, I have now the pleasure of also looking full time at the development and our international business. So quite an exciting development within one company, but also a business that has grown over the years. So it's been a fascinating journey from someone in the bottom of the scale to someone maybe a bit higher up and having the chance to speak on panels and be an expert. Never thought I'd end up there, but it's good.
Extremely respected in the industry. And when you moved into hotels in that period of COVID, it must have been a bit frightening, but probably a good move in all told. I mean, hotels pretty good to be in at the moment, at least in terms of market transactions.
Definitely, but I think looking at, if we go back to what was happening January, February of 2020, and when life stopped and brokers couldn't visit properties, and we had to think about, are we ever going to travel again? Are we ever going to see a property? I think that was probably not such a good place for a couple of weeks. But I think it taught us so much on how we can be resilient, how we can obviously focus on what are the important things, and that has been transformational. I think the way we do meetings, how we can do podcasts like that, how we do meetings, how we are far more resilient, hopefully. And I think what's happening in the world today might teach us again how to be resilient in the future.
Indeed. And you're a proud Parisian, aren't you? Originally from Paris?
Yeah, quite Parisian, but in London now for 25, 26 years in the summer. So I don't know, Parisian, British, London person.
Global.
Meet a global, a child of the
Aren't we
universe,
all?
something
Aren't we
like
all?
that. Yeah.
Well, let's start with the UK. I've just been writing for an article that the UK government might have started believing that they tamed for markets. Inflation is going down to their target rate of 2%, also that of the Bank of England. Interest rates will probably follow that. That would probably mean a little bit more disposable income into the pockets of consumers, all good for a high street, including hotels. But yet we still have a great deal of global polarization, which of course came to a head this weekend. How do you see the UK? I mean, I guess we have to put everything we talk about in this podcast through a prism of what's happening in the Middle East. How can we not? But in general terms, if that's possible, what's the UK doing in terms of hotel transactions and the health of the hotel industry?
Yeah, I think when we prepare obviously this podcast, life was in a certain place and the world was in a certain place. Fast forward 4 or 5 days later, the world is in a slightly different place. But I think the UK has had his ups and downs, and we know what's happening with the economy and on the political front. But generally, from a transactional perspective, last year was a decent year. We had a good number of transaction on our side. We did 100 transaction last year in the UK, which in the context of what we've done in the past 15 years is a very logical numbers and probably a bit up. We had less portfolio transaction last year, so that's what impacted slightly the transactional volume in itself. But there was a very healthy turnover of single asset happening or breakup of larger portfolio. Yes, the top line are reaching a point where it is a bit challenged, and we probably going to see a bit of stagnation on that side of things. Costs continue to be under pressure. There has been some relief on some part of it, but now we'll have also business rates. So overall, there are a bit of headwinds in front of us, but the market is still functioning. And I would think as long as buyers and sellers remain realistic and logical in their approach to coming to market, generally we've seen a good level of transaction. January was super strong for us. February has continued, and I think based on where we are, March, April, May are going to be very strong as well on transactions. So all generally positive, a number of large portfolio as well on the market. Things take longer. That's what's happening. There are a number of things that delay processes, but generally, as long as you have a willing seller, you will typically find on the other side a willing buyer.
The last couple of years, Carine, have been, as you said, probably influenced mostly by single asset transactions. Portfolios seem to have been largely on the back burner. We've seen a great many hotel chains and owners coming up with partnerships to expand across certain geographies with scale. We've also seen a lot of hotels refinancing. PPHE refinanced on the Park Plaza London at Waterloo today to 150 million. I mean, generally, not just the UK, but generally in Europe, what do you see panning out for next year in terms of the type of buyer and also a type of asset, the type of transaction, the business model that is going to be that money's going to go into?
Again, quite diverse base of buyers depending on the country and the type of asset you're looking at. But we seeing a lot of patient capital and more less return orientated. Your family office, your private owners, your owners operators are quite active. The big funds are there looking at opportunity. They need scale. For some of them, they need value add, which in some instances is quite difficult to find. I would say in the current environment, we haven't seen a lot of distracts except in some jurisdiction. But generally, I think the buyer's base is quite broad. And again, what has happened in the Middle East over the last few days might also inform a bit of the type of capital coming to Europe and the UK, as they might need to diversify and as Europe is seen more as a safe place. So generally, I would say quite diverse. Every opportunity will have a good base of buyers. So on that side, we are good. Assets, luxury remain something people are interested in, and I think that will continue. Serviced apartment, any cost efficient model, hotel operations typically also is of much interest. We've seen quite a bit of hostels coming to market. So that side of the market, we've seen quite a bit. So lifestyle continue to be something people want. Anything where you can also add some value with either repositioning continue to be important, adding a flag, all of that remains a key project. But we're seeing quite a lot of stock coming where all of that work has already been done. So it's leaving some value on the table for the next buyer. But overall, I would say it's continued to be quite a healthy mix of buyers out there for opportunities.
And A&O Hostels today announced a new project in Berlin for a total of 8,000 beds just in the German capital. Didn't mention the price they bought the former office site. I believe it's a former office, but 40 million euros of capital expenditure going into that building just today. There is you hinted at the notion of trying to add value to that divide between the bid price and the ask price, but it's a big division, isn't it? It seems to be growing. Where are buyers or sellers trying to find that value for their exit, and where do buyers create that value? What are they looking for? Because they've got their exit in mind already when they're buying. Presumably, a lot of the traditional private equity aren't going to get their nose in the door if you say they have to be patient. I mean, do the mathematics stack up, or you just have to be really creative?
It's a good one. Is it always a constant debate for a broker? I think there is always that gap between the bid and the ask between buyer and sellers. When you want to sell, you always think your property is worth more than typically what it is. I think in some market we have to be a bit realistic of the pressure. People are not buying forward projection as much. And in the current environment with the uncertainty, I mean, forecasting anything is probably quite a challenge. So I think we need to be realistic and guide sellers with the reality of where the market is. On the buyer side, as we said, there are buyers, but again, they need to take into account what needs to be done on a capex perspective. Typically, is quite a big thing. What's the brand is going to ask? Do you have any PIP requirements? How do you negotiate yourself through this? What do you think from an operational perspective you can actually improve? Do you think there is still value in the various cost line? How do you budget for your business rates going forward and the impact that might have? So there are a number of points that we are seeing more and more in discussion between buyers and sellers. But as long as someone again is motivated to sell, typically there'll be a way to find some compromise. But it is, and it's always been, I think, a conundrum between buyers and sellers. Is it much different than it used to be? I think the world is quite different, and things can change quite rapidly. So what was valid maybe a week ago might not be valid a week later. But all of that we have to navigate and support our clients with it. But generally, as I said, if there was no market on each side, we will not have sold almost 200 property across Europe last year. So I would say that is quite a strong stamp of the fact that there is a market out there and is functioning.
I mean, there's always the argument that the world essentially doesn't change either. We lurch from one crisis to the next. Older heads with longer memories will think, well, 40 years ago, was it any better? Khrushchev banging his shoe on the table in the United Nations. You just, you know, this too shall pass, we hope. So, I mean, who knows? Do you really, do you see, I mean, a lot of the mathematics seems to me, not all of it, but some of it seems to be based on the notion that the consumer will continue to travel.
Mhm.
Since COVID, we've ended that period of revenge travel probably, but it's still dependent on that spend. There's mathematical equations presented that there's a bifurcation, the K-shaped
Yeah,
demand
economy. Yeah.
shape of luxury just going through a roof and never ending. Do you see that changing, or is that here to stay? Is travel patterns? People perhaps who were going to a mid-scale hotel, maybe going down a bit, but luxury seemingly not caring, and buyers and sellers take, you know, assuming that status quo is going to stay.
I mean, I guess it's going to continue, and I would say it might even be more pronounced as we go forward. I mean, the luxury segment even if the stock market is impacted or other factors, I think that bid will continue, and we will have that. By comparison, cost of living is going in crisis, and cost, depending again on where the world is going to evolve in the next few months, might have an impact on that bottom end of the market, and being maybe a good thing for more economy domestic travel. So I think that could help as well. So as with life, everything tends to become more pronounced. So I think, in my view, that will continue going forward. Yes, or at least for the near future.
Let's talk about specific markets, and presumably we'll chat about these places as though the Middle East crisis did not happen. Let's ignore it because it's
Probably better.
silliness. Bottom line, it's a whole load of silliness. Spain. Has Spain reached peak Spain? It's been the golden child of Europe for probably coming up to 10, if not longer, 15 years. How's Spain doing? It seems to me to be carrying on, although they're running out of beaches, perhaps. But has Spain reached peak Spain?
I don't think we're just there yet. Every year we say might be at the peak, and it continues. And I think, again, people, based on travel, Spain remains a safe nearby option, and they should continue to benefit. So I don't think that's stopping for the time being. And again, the data as of now doesn't suggest anything different. So I would say we're going to see more of that slightly on the Spanish front.
Viva España. And I hear a lot of the Spanish hotel companies. Some people might have a hard time trying to remember who they are, but there's a few, and they're actually even extending their tentacles abroad now. So
Very much
there's a
so.
different dynamic as well in Spain. So not just international private equity, which presumably were crowding those airline seats initially, but as other models and capital looking around, both domestically and internationally from Spain. Now, Germany still doesn't seem to get a break. Its chancellor was in China last week trying to do something or other. I forget what that was, but Germany. How do you see them going? They've got elections coming up, I think, this year, and notoriously, I mean, I don't want to stereotype Germans, but but apparently they like to spend less on average than other countries do on hotel stays, is what I hear. But then the hostel industry, the hybrid hotel hostel industry, is doing extremely well there. Premier Inn seems to be making a profit for a first time. How do you see Germany?
It's been a tough few years for Germany, and again, from a brokerage perspective, we've seen quite a few companies even closing their German division at that point. But everybody's rebuilding. I think we've seen more momentum. I think last year has seen some progress. Obviously, Revo and what's happening in there is having quite a big impact on the industry, and I'm sure in the next few months that's going to unfold to create some opportunities. Would that be to operate, or maybe owners rethinking their strategy? But generally, from our side, we've seen a pickup in activity, and that has been quite positive from new mandates, new instruction. So it's not fully functioning, but it is a much better place, I think, than it was 2 or 3 years ago. And that suggests why also a lot of companies are rebuilding team around Germany, so they can probably see a bit more of a positive outlook for the country. It's going to take a bit of time, but we've seen more motivated sellers and buyers in that market. I think, yes, some partly stabilized with some more positive signs.
And we'll be in Berlin in a couple of weeks' time for IHIF, of course, discussing that and other issues. Yeah, it seems that there's quite a pivotal year in Europe for elections. I think Hungary might see a new government. Um, Labour government in the United Kingdom doesn't seem as strong as it perhaps did a few weeks ago. The by-election on Thursday saw an election of a Green Party candidate, which is quite amazing. Um, perhaps people used it as a protest vote. I'm not sure, but Europe, it's never still, is it? It's always fluid and has an effect on the hotel industry. Let's talk about your country. Well,
We
pretty
have
much
election
your
next
adopted
year.
country.
That'll
We
be
had this
fun as
discussion
well.
already, but France. What's going on in France? I mean, um, you must know what's going on in France. Tell us all.
Election next year, so that'll be an interesting one. I think obviously we had the Olympics last year, so there was a bit of momentum in the market, but also of pause as people waited for the Olympic effect to go through. This year actually has proven to be, or last year, 2025, has proven to be quite decent, and there were some very strong performance across France. Activity has been very strong. We've seen a lot of transaction across France, across all region. We have more opportunities coming. It's been one of the most active market of last year in transactional volume. UK was first, Spain was second, and France was third. So the French market has some challenges, and same performance is starting to be a bit stagnating or recalibrating. But overall, we think another good year, and the team has been superbly active. So I think we'll see a lot more transaction in the next few months. There's been a number of portfolio put to market or trying to be sold in France. So France remain for some buyers not worried about labor impact, maybe because that's typically
Hmm.
the key reason why some people will ignore the French market. But there is still a really strong market, or at least for us, it's been very active last year, and we're very positive for this year as well.
I mean, outside of the hotel industry, of course, all this goes on in line with what happened in the politics, and we've gone back and back and back to this during this short discussion we're having. But it also very telling in this latest crisis that European leaders have been totally bypassed in the decision making process. Either they're saying they will not agree to it anyway, but then the US just aren't asking. So who knows if that has what effect that will have on any of this. But it seems to me probably European politicians make a career out of saying they're going to chart their own courses, because that's what voters want to hear, perhaps. But it is of interest to me, under all this hideousness going on in the Middle East, some of the rhetoric and decision routes that have not on have or have not happened across Europe. Another country I'm fascinated by is Italy. I'm married to an Italian wife, and with that comes thousands of other Italians in every walk of life, which is glorious. You mentioned earlier family offices still playing a very, very strong part in the European hotel transaction field. You would probably point to Italy as probably the family office market. It never seems to change. Why should it? It's Italy. It's glorious. What do you see going on in Italy this year? They've just come off a very, very successful Winter Olympics in Milano and Cortina d'Ampezzo. Um, I'm not sure what the numbers are in terms of the STR data, but we saw pre-bookings, business on the books, very strong already for those regions that hosted the games. What do you see, Italy? Do you see a strong bounce off that Olympics and a good year ahead for Italy?
Yeah, I think Italy is going to have another strong year. Last year, investment volume, they were in fifth position in Europe. And I think that's testament to how the appeal of the Italian market has grown over the last few years. What's most interesting, I think, in Italy is before, obviously, all the interest was very centered around Milan, Rome, Venice, and that's pretty much as good as it gets. But we're seeing more interest, we're seeing more activity in secondary markets, which where I think when the market starts to, like the UK, to get to a certain volume of transaction, you need to have more than just few luxury assets happening in the key capital cities. So we're seeing more secondary markets such as Naples, Bologna, Verona, where we've seen more activity happening. So people can see the value the opportunity offered by this secondary location, even Turin has started to attract more buyers. So that side of things is going to be quite positive. So I still think Italy will end up in the top lead of the 5 top markets in Europe. I've always been a bit advocate that to find value in Europe, Italy for me was always the place where I thought you should invest. Obviously, on the selling side, they've realized that they are superbly attractive. So that needs to be managed. But there are plenty and thousands of hotels across Italy where I think you can really make a difference, where you can still buy at a relatively decent price, do your upgrade, do your branding, do your repositioning, and really exit at a good price. So I really think that value creation can happen in Italy, and probably more so than you can find in most countries in Europe. Big
And a great
advocate to
deal
be
of
global.
American travel interest in Italy. It seems to continue and increase, and also, as you said, increase in both secondary and even tertiary markets. I mean, you think of some tertiary markets in Italy, such as Lecce or Verona or Padova. I mean, these just absolutely glorious places. In any other country, perhaps would be primary markets. So Italy, a huge, huge future as always, I think. Is there any other markets that caught your attention in Europe last year and will continue this year? I mean, Greece, I guess, would be one obvious one. Any others?
Greece, yeah, I continue similar activity, transaction, people looking to also benefit from that wave of interest for Greece. We've seen a bit of resurgence and activity in the Nordics. So that's a place where I think people have been interested, and people are thinking of developing strategies and targeting. What has been the blocker there has been opportunities, and the fact that quite often, obviously, the real estate and the operation are separated is very much a lease model. So if you can find opportunities where you can also get your hand on the real estate and the operation, I think you have a good market. I'm thinking Copenhagen, where we have a number of mandates there. The market has had a massive influx of supply, but now everything seems to have stabilized. Great location in my view, well accessible. You can do a tour of the Nordics with train. Transportation for me is also a big point of where you should invest somewhere. That come back to Italy we discussed. I mean, transportation is very good. It's probably better in some places than France in Italy. So Nordics for me is an interesting one. And at the back end of last year, I discovered Prague. And I think Prague has a bit of activity. There has been few transactions, people looking. There'd be more announcement, I think, in the next few weeks. So Prague for me has a lot of attractiveness, I think, and seeing more upgrading of hotel, luxury properties being built there. And it's just a great city.
From a hotel transactions and operations viewpoint, you mean? Because obviously everyone knows it's a beautiful city.
No, I think
Perhaps
from
we
that
should just
transactional, but I think, yeah, the CE generally had been a bit forgotten, and was a decade ago, it was quite attractive, and people were looking that as top. But again, Czech Republic is a place, and in particular, Prague is a market where if I had money to invest, it'd be amongst the location I will have a look for. Yeah.
Or perhaps we just should follow where you're traveling to see where the hot markets are. So it's probably a best benchmark we can have where Christie is going, if the market's going, perhaps. Carine
Be
Bonnejean,
careful.
thank you so much for your time. It's a fascinating tour of Europe in terms of hotel transactions. As we said, who knows? It might all change tomorrow depending on events, but then I think that's always the case. There's always something going on. Otherwise, we wouldn't be getting together regularly at investment conferences to moan about the last headache and how we're going to have to come up with solutions to get over it. Thank you so much for your time, Carine. Thank you, and thank you for our listeners. Thank you so much for tuning in again. I hope to see you next time on The Upgrade. For now, goodbye.
Hello, I'm Luke Haynes, People Newsletter Editor CoStar News, and the host of Top Credentials, a monthly podcast exploring the colourful careers of those working at the top of UK commercial real estate. In the episodes, we discover the valuable lessons influencing the daily decision-making of property sector leaders, and hear about the aspects of their job that make it a little easier to get out of bed each morning. We'll also ask for their views on the latest news and policies shaping our constantly evolving industry, and even get them to share a famous quote or song title they think defines their career or the profession. Listen on Apple Podcasts, Spotify, or wherever you get your podcasts.
This episode of The Upgrade was recorded on March 3rd, 2026, and edited by Sean McCracken. Visit costar.com/hotel news for more of our coverage and find all of our podcasts on Apple, Spotify, YouTube, or wherever you listen.